All right, inflation or deflation? I don't know. Art Laffer's here, former Reagan economist. John Carney's here, ace financial journalist. Either, look, most people think it's inflation. And then we had last week, the Bank of America was writing 3 rate hikes to conquer inflation. But you have a different view.
Yeah, well, the markets are telling us that inflation is going to come way, way down. I mean, not only are oil prices way down, Larry, but we also look at gold. I mean, gold has fallen sharply. If you look at cryptos, they've fallen sharply. This is the era of King Dollar, and I'm really very serious. And the reason for all of this happening, I think, is we do have a good economy, but we have a really, really great Fed chairman who's going to be in that position for a long, long time, and you're going to get stable prices. Just imagine, Larry, if you knew that the dollar was going to be worth the exact same amount it is today, 2 years, 5 years, 10 years, 20 years from now, what do you think would happen to the stock market, to interest rates, all of that? I think we're in a position now for a really very strong anti-inflation environment with strong growth and great capital markets.
Have you heard Kevin Warsh on the dollar? Has he said much on the dollar?
Not since he got into office, but in the past, he's been very strong on the idea that he thinks we should preserve dollar leadership in the world. And I think that's absolutely what he's going to do. I do think we're going to get price stability. I think actually what we're going to see is a lot of the inflation that we've had in the last 2 or 3 months get completely reversed, and we're going to see deflation. We may actually see the CPI go negative for a month or two because gas prices are coming down so rapidly.
Arthur, is gold the best dollar measure, or silver, or commodity? I mean, how do you the dollar itself, the exchange rate, the so-called ICE exchange rate, the DXY, it has appreciated since Kevin Warsh took office. Are there other ways to measure the dollar?
Yeah, well, I think gold has always been the best way to measure it. I mean, gold is the first refuge of the cautious, and whether it be war or inflation, gold responds very quickly to that. And the drop in gold is exactly what happened under Reagan and Paul Volcker. As you'll remember, I think gold went from about $800 an ounce, maybe a little higher, down to about the mid-300s. And then it wasn't until we got into later times that it soared back up again. But I think John Carney's just completely correct on this, that we're in for stable prices for quite some time in the short run because of oil, but in the long run because of the monetary policies that Kevin Warsh is going to put into the Fed. I think that's really great news for us.
John, bond market stuff is showing too now. The so-called CPI break-evens, their rates are coming down. The 10-year rate is coming down. I think the 2-year rate is coming down. So here's the question. Would Kevin Warsh use these market price indicators, right? Markets know more than we know or than econometric models know. Do you think he'll do that?
I do think he'll do that. I think he'll try to say that we should be looking at what the market is actually saying rather than what some economist's model is saying. By the way, even the models should be saying at this point that we're in for deflation in the short term. The big fear, remember, even people like Chris Waller were saying, was that if we get too many, supply shocks, that it'll move up inflation expectations. That's not happening. Inflation expectations shown by the market indicators are coming down. People do not expect a lot of inflation at all. The market is telling us that that period, which we just had because of the Iran war, is over. That was the only inflationary impulse in the economy. It's going away. We're going to have deflation.
It didn't even stop the economy. I mean, for whatever it's worth, it didn't even stop the economy, which could be growing close to 3%. It's fascinating. We will see you in Washington, Mr. Art Laffer, and John Carney. Thank you ever so much. We appreciate it.